So the way we're going to structure it is we've asked Avin to talk on 3 topics. Firstly, sort of giving a bit of an overview and introduction of him, and then the scale-up story of Housekeep. Then to talk about how they've been impacted by COVID-19, and then lastly to kind of give his view about investors and what investors and investor behaviour might be like following on from COVID-19. So I'm going to hand over to Avin, but first I thought I'd just give him a little bit of a overview. So Avin is the founder and CEO of Housekeep. Last year, the FT named them as the 6th fastest growing business in Europe, which is, I guess, pretty phenomenal as a relatively young business. This year, they're the finalist in 3 categories in the Amazon 2020 Scale Up Awards. So Housekeep has been nominated as Scale Up of the Year and Disruptor and Innovator of the Year. And Avin has personally been nominated as the Entrepreneur of the Year. And it's also worth saying, aside from that, if that's not enough to keep Avin busy, he's also an angel investor, and he's got over 40 investments in consumer technology businesses. So I'm going to hand over to you now, Avin, and tell us about you and tell us about the Housekeep story.
Sure, thanks, Chris, and good morning, everyone. Very glad to be here and to share some thoughts and listen to some questions. I'll start with a little bit of background about me. I grew up in Manchester, so I'm a solid Northerner and a solid Manchester United fan, because that's the only team in the northern half of this country that's worth noting. And sort of steadily made my way south. I studied philosophy, politics, economics at Oxford, which is now much maligned thanks to some of our politicians. But it's a sort of decent starting point for understanding how to break down problems and think about things. And then I'd always wanted to start my own business, so I went into management consulting, so effectively helping big corporates with strategy and operational decisions. So things like, for BP, we said, what should our chemical strategy be for the next 10 years? A fairly open question. For companies like Thames Water, they said, hey, it's July and we were forecasting to make $1 billion of profit, but it looks like we're going to make 0 of profit. Can you help us rustle up $1 billion before December? And some of the work was helping private equity funds buy companies, doing commercial due diligence work on those companies. And that got me interested in the private equity space. And I as much by fluke as anything else, stumbled across a firm called Smedvig Capital, who are a growth fund. So I joined there. We were a team of 8 people managing about £500 million. And we invest in that in fast growing companies across the UK and Nordics, typically post-revenue, but pre-profit, usually a few million of revenue to kind of prove the model. Trying to scale up to 50 to 100 million of revenue was sort of the idea. I mean, wasn't really a revenue target, but that would be the sort of size where I'd be thinking about exiting. And my role there was 50% of it was finding interesting things to investing and deciding that we should get out of things at various points. So doing pure investor work, I suppose, and about half my job, an unusually high proportion, was getting involved in those early stage high growth businesses at board level. And I think a typical founder would be somebody who is sales driven, or they're ideas driven, because they've got to have had an idea in the first place. They're probably sales driven, probably quite inspirational and visionary. They're less strong at the kind of stuff that consultants are good at, like somebody mentioned pricing. I mean, I could probably summarize my time at board level as hire more good people and raise prices. Those are the 2 things that you just say on repeat. I basically did that for 7 years. And it's slightly more difficult doing it on this side of the table, but nonetheless, that's all you need to do: raise prices and hire good people. And I got to a point where I was 29 and a half. I wasn't engaged or married, didn't have a kid, and I was kind of like, I either have my midlife crisis now and start something, or I do it much later. It was basically, should I buy a nice car or should I start a company? And I obviously made the wrong choice. And I did. It's quite unusual, I suppose, compared to most founders. So I am a dispassionate, uninterested about really any company, apart from one where I can maximize profits in the shortest time possible. And I'm sort of exaggerating, but not that much. I mean, I did quite a structured piece of work around what markets are attractive, and I was looking for 3 or 4 sort of things, I suppose. And the first was, I said, okay, I'm probably not the visionary sales ideas kind of leader. I'm not going to start a Facebook or TikTok or whatever these kind of things are. I'm not that kind of person, actually. I should go and look for a big existing market for something. And I was thinking about what, in the end, what Pret did for sandwich shops, made sandwich shops better, or what Pets at Home did for pet stores. To some extent what Uber did for taxis, or Just Eat had done for takeout at the time. Delivery wasn't really around then. And one of the big existing markets out there was house cleaning. It's about 4 billion a year. It's been growing pretty fast. So it's more like 5 billion now. And the second attribute that I was looking for was a high degree of fragmentation. So in other words, there's no one in the space really. No one's got any decent market share. So if I were to go into sandwich shops today, Pret have a decent chunk of, it's probably still very fragmented, but Pret have a decent chunk of market share. And there are many sandwich or takeout chains, but actually there's no one really in house cleaning. The biggest would have been a small sort of franchise operator like a Molly Maids, or there are a few other sort of small franchisee operations like that. So here's a big market with a really fragmented supply base, and that to me sort of smells a bit like opportunity. But that wasn't on its own enough. I wanted to understand why is it fragmented, and should it be fragmented, and can we do something that's radically better? Now, on this point about radically better, all I can suggest that anyone does is to read an essay by Paul Graham called How to Generate Startup Ideas. And it's probably the single best thing I would read this. And he talks about solving urgent problems for a small set of users. And what most startups fail at doing is trying to solve a non-urgent problem for a large number of users. And the point about an urgent problem is, when we started Housekeep, we had to really figure out what the urgent problem was. And the urgent problem wasn't that we did, in fairness to us, ride a technology wave. So if we'd been 10 years earlier, we wouldn't have been able to bill customers automatically. We wouldn't have been able to use a field app for the cleaners. The old model for cleaners was everybody comes into an office and then they get sort of distributed back out, and that obviously doesn't scale. We did that initially, but it was very difficult. After about 15 cleaners per day, it all sort of breaks down a bit. So we did ride the technology wave, but more importantly, what we did was we found an urgent problem to solve. And going back to that point, what it probably looks like we did was that we built online digital tools for customers and, blah, blah, blah. That's not really what we did. The one and the only thing that customers care about is how good is my cleaner. Don't care about anything else. They don't care about our design, our user flows, the color of our buttons, our email copy. None of it matters if the cleaners are not good. If the cleaners are good, you can get away with the rest. And in order to get the best cleaners, you just have to make sure cleaners get the most money in their pockets. And the way that you do that is also fairly straightforward. You find where a cleaner lives, and you get them as much work as possible close to home. And that has 2 effects. That increases the hours they work, and it reduces the time and the money that they spend traveling. And in London, a zone 1/6 travel card's about 60 quid. So knocking that out of, say, 300, 400, 500 pounds of earnings a week makes a big difference to a cleaner's earnings. And we just spent all of our resources making that better. And so that focus on really solving the problems that matter and not being distracted by the rest. I mean, it took us 3 years to build the ability for someone to truly book online. We used to outbound dial every customer in order to book them in. We had no technology to do that, but we had great technology in routing and scheduling. that's sort of, I guess, a bit about me and the Housekeep story. I just want to, before I pause, a couple of other bits I just want to mention. So some extra things that we did that might be relevant. The first is around people. And you could probably read anywhere, hire the best people you can. Well, that's great. But when you don't have any customers or any funding or anything really, it's quite hard to hire the very best people. It turns out, Steve Jobs didn't want to work for Housekeep. His mistake, I'm sure. And so it's a bit more subtle than that. You want to hire the best people you can at each stage. And one of the things that's difficult and that hadn't really occurred to me until maybe a couple of years ago is that my job, assuming that I'm only good at this job for a period of time, and it may be that I myself need to replace myself, is that I need to rebuild a series of teams for different stages. The team that you need at startup stage is quite different to the stage that you might need at growth stage, and very different to the team that you might want at large scale. Like, I certainly don't want to be a manager of a team of 500 or 1,000 people. Actually it's the best people for this stage and the best people you can get, and you have to keep rebuilding and upskilling your team over time. And that's difficult when you grow up with these team members over time. The second thing that we did that's worth sharing is there's this brilliant 80-20 rule that everybody loves, and especially me as a management consultant. And it's just nonsense. It doesn't work for startups. Like, we built everything. Nothing works first time. Everything that we attempt needs rebuilding. So recently we've been capturing information on why customers might be skipping cleans. And so we're like, hey, we added a reason in the drop down that said COVID-19. So then they all clicked that. It's like, great, all customers are skipping cleans because of COVID-19. That's of zero use to us. So then we broke it down. Is it, COVID-19 because you're cleaning yourself? Is it COVID-19 because you're vulnerable? Is it COVID-19 from something else? Whatever the reasons were. It's like, cool, now we have this information. So it's of no use to us. But you can take that data and match that together with calls you might be doing with customers or surveys you might be doing with customers. And then you can float ideas and say, hey, if you're worried about social distancing, have you considered A, B, or C? You could be out, or you do realize that you are socially distanced from your cleaner anyway during cleans, or C or D or E, or here's a special offer. And it's actually some combination and blend of the different things that keeps customers active and or reactivates them. And so just doing we've discovered that 100% of cleans are getting skipped due to COVID-19 is of absolutely zero use to us whatsoever. And so getting to kind of all the way to the real underlying problem and solution. I had a fairly ferocious internal phone call a couple of days ago where the guys were like, yeah, turns out everyone's skipping cleans because of COVID-19. It's like, cool, go away, come back with something better. You've got to push quite hard to understand what's going on at a deeper level. And then the last thing I just want to add on that is, as a founder and as a founding team or a startup team, your job is to move the goalposts. You won't be able to do it very often, but if you don't like what's happening, change it. So a recent example for us was that there was a lot of confusion about whether or not cleaners could work, and in particular whether the government guidance said that the work needs to be essential or the travel needs to be essential. Now, by fluke, we managed to get onto the government committee that was talking about work in people's homes, which was published a couple of weeks ago. I don't know if anybody noticed the furore about Piers Morgan saying, well, I can have a cleaner, but not my son come to my house. That was because of us. We managed to get the government, they'd already published some guidance about nannies. We managed to get them to put the word cleaners in there to make it unambiguous that cleaners could work. And that we didn't mean to create press coverage, but did create a huge amount of press coverage. And now it's crystal clear to everybody that cleaners can work, mainly because Piers Morgan has been saying every day, if I employ my son as a cleaner, can I see my son? So, if you don't like the field, move it, move the goalposts, and that's part of your job as a founder. I'll pause.
Yeah. Pause there. So we've had a couple of questions come through. Kim, do you want to start with yours? You're on mute.
Yeah, so my question was around how you unite a team and build a culture when the team is obviously quite sporadic and spread around London.
Yeah, and you're specifically talking about now, as opposed, or are you talking about the head office team now, or are you talking about the cleaning team before?
The cleaning team before.
Yeah, it's really difficult, and I don't think we've. I mean, very cute baby, Rishi. I certainly wouldn't say that we've cracked it by any stretch. I'd say that whilst we're probably the best at it in our space, I also think that we're very bad at it, if you're allowed to be both those things sort of simultaneously. And, you know, what we used to, I think one of the things that we fundamentally, I guess I'm going to list a bunch of complaints rather than answer your question, but I'll hopefully it's still useful. I think if you think about it from a cleaner perspective, what we want is a cleaner to go to all of their cleans, do a great job, and never talk to us, because every time that they talk to us costs us money, because we have to have somebody, it costs us a human to do something and to interact with them. So ideally they talk to us not at all. But actually, I think if you put yourself in the shoes of a cleaner, Housekeep's the one place where you can interact with something that is safe and welcoming, and whatever their legal status is, they probably see Housekeep as their boss of some sort or another. And I think it would be weird for people to, what we're effectively saying is never talk to your boss. And I think that's a weird experience for people. And I'm not sure we've got that balance right. So we've done a lot of things. We've got some great tech. Customers can review cleans, and then those reviews get sent to cleaners. They love those 5-star ratings from their customers. They can talk to us via live chat, via email, via phone. You know, got loads of tools for them to interact with us. So we've done a lot of stuff. And like I say, I don't think what we've done is bad, but I feel like there's a long way to go. And interestingly, we've, through necessity during COVID, significantly ramped up our comms. So we're sending at least 1, maybe 2 emails a week, doing a lot more outbound dialing. And I think the payback that we're getting for that in terms of sort of loyalty, implied reduced churn of cleaners is obviously expensive for us. I suspect the payback is positive, and we should resource that function up more with more real human touch points. So not emails, but like a video call or a phone call, something you just feel, or, you know, pop into our office or whatever it might be.
Cool. Thank you, Avin. We've got a question from Nicola.
Yeah.
Westminster.
Yeah, I'm just quite interested in terms of how Housekeep actually generates money. How has it become so successful? Where does that come from?
Yeah, it's fairly straightforward. We charge an hourly rate to customers, deduct some for ourselves, and cleaners get the rest, basically. And cleaners earn anywhere between £9 and £12 per hour, and we charge pretty much exactly £15 an hour. We just raised prices, actually. And yes, we take a cut there, basically. So more cleans means more money for us, basically.
Cool. And Faye, you've got a couple of questions.
Yes, so one is about the good people that you refer to. So an easy question would be, who's the best person you've hired and why? But generally, what's your approach to hiring good people? Who's a good person to you and why?
I have a colleague on the line, so that I'm going to have to, it's hard for me to answer anybody apart from Diana Ketty. But only because it would embarrass her if I said her. I'll change the answer. The definition of a good person to me is straightforward. I think it's sort of 3 things. Somebody who is bright or curious, I suppose would be a word I would use. The kind of person that says, to take the example earlier, that says, oh, we should find out if COVID-19 is why customers are cancelling. And then they find out, yes, And the person that says, well, okay, that's not really that useful to me. The person that goes to the next step and says, okay, well, what's underlying that? How do we solve that? The person that kind of keeps going. And those people tend to be, I think, academically bright, but they don't have to be. They can just be those kind of irritating people who won't take no for an answer, which I think would be a fair way of describing myself, I suspect. You know, the kind of people who don't stop until they've understood something. It can be quite annoying when ordering in a restaurant, but you know, hopefully without the unpleasantness of all of that. So people who are bright and can kind of figure stuff out. I think the second thing is you just have to have, you have to have people who are hardworking. And we can sort of tiptoe around this and say, you know, the most effective hours in the day and all of this, whatever, but it's just hard work. No one has built a successful business anywhere without working hard. Like, it's nonsense. And there was a thing on Twitter about 6 months ago when everyone had a lot more free headspace to think about miscellaneous things about, oh, you know, I apologize for building my business by working so hard. I wish I was only smarter and then we could have all worked less hard. Absolute nonsense. There's no way to build a successful business without working hard. And so you need the people around you to work hard. And then I think the third, and I don't want to underestimate this at all, is sort of loyalty and commitment to the business. It's very hard to do that when you hire people later on, but some people just have that. They're the kind of people that care about what they do. And the first person actually that we employed, she's ahead of me on the payroll as employee number 1, is our head of ops. And I mean, for 6 years, I've been able to say, I find this thing difficult or annoying, or I don't want to think about it. Can you make this go away? And she's able to just take things off my plate. And I never, ever have to worry, no matter how, I mean, we've very rarely had terrible conversations, but I've never, ever thought that Lisa's going to walk out of this business. And that's extremely valuable when you know you can rely on someone. Whereas, you know, some, for example, software engineers, they're rather, you know, it's very easy for them to find jobs everywhere else, and they kind of, you know, expect 17 different types of bacon every morning and 4 different types of coffee and blah, blah, blah. And they're always, you know, that it's the nature of that job function. You've got to treat them differently. But you can't rely on them in the same way. And that takes an emotional toll on you, the person running the thing, if you don't have that. But it's the reality of different job functions and so on. But if you can find people who you know you can rely on, no matter what happens, that's really valuable. And you should reward them and help them upskill, because they would have been right for one phase, but not necessarily a second phase.
Yeah, that's really good advice. And then the second question was about you.
Yeah.
And what personal development you've had to go through in order to, I did originally have like keep up, but yeah. Have you had to do any personal development? Have you changed at all?
No, I was the finished article right out of the box.
Perfect, from the beginning.
Nothing to see here. It's obviously hard to observe yourself developing, I suppose. And I guess rather you know, try to stare into my soul, I suppose the one thing that I would say that I've had to do, that's probably the thing that I'm at least most aware of, even if it's not the most important, is that in the early days, I was the sort of MVP, the most valuable player, right? So I'd be able to see everything and understand everything and pull everything together, give or take a bit. And that's probably how most founders start out. They know about sales, and they know about operations, and they know about customer service, and they know about strategy and pricing. They know everything about everything. That just does not scale for 2 reasons. One is, I mean, I was basically working, you know, 15, 16, 17 hours a day, 5 days a week, roughly. And I sort of got bored of doing that, partly because I got married and had a kid, and I didn't want to do that anymore. but also it was just there were just there were way more things than there were before. And sort of a few years ago, it became clear that I didn't want to do that job forever, and I couldn't, and that wasn't the right choice for the business. And so trying to move away from sort of command and control to letting people operate independently and with autonomy, and not being too angry when they don't do things in exactly the way you want them to do it. And ideally having them do things far better than you would have done it yourself. That's sort of the goal, but it's hard to get to. And I don't think I would claim that I've got that balance right. I've probably swung in both directions too much, but I think that's the one thing that really changes when you move to sort of this scale-up phase rather than the startup phase.
Yeah, thanks, appreciate that.
Cool. And then if we bundle the two questions together, so we've got Rishi's question, and then Kim's question.
Yeah. The short answer is we did it internally. I was very lucky. One of my best friends was is a developer. We had a chat, had the sort of meeting of minds, and he joined, and I got, you know, the bright, the drive, and the loyalty. And then so we started building in-house, and we've kept it like that. I think I would build in-house if you can, but I recognize that you often can't. If I was starting again today, I'd be tempted to start offshore or agency and just get used to that as the new world. But yeah, I don't have a strong opinion. I think both have advantages. Financial reporting, we were pretty, because I think because of my background, I kind of knew what reporting we would need later, and legal structures that we need later. And so we actually had quite a lot of reporting early, because I wanted to know, you know, how many customers do we have? How many did we add today? How many did we lose today? How many, you know, what do they do? What do they spend? Blah, blah, blah. Because at that time I was worried about, does this thing even work? Is it, you know, is it worth doing? And so we were pretty good on reporting early, and we invested in that early, which has been valuable now. And then we've constantly just evolved it over time and kept reporting and developing new metrics as we go. So it's a little bit stop-start. You suddenly find, you know, you've got a breathing space. You're like, hey, what on earth are all the numbers? And then you kind of pause a bit, and then you say, hold on, we don't know anything about anything again. So it's a little bit stop-start, but it's certainly been evolving.
Cool. Thank you, Avin. So I guess the next question to move into, and you've talked a little bit about this, is about how COVID-19 has impacted your business and how you adapted. We've been having some conversations over the past couple of months with a group of leaders through Birmingham, and I guess, you know, there are some businesses who it's not impacted at all. Some businesses have increased, but actually the vast majority of businesses have either been hit really hard or completely stopped. And obviously you've alluded to the fact that cleaning was really quite hard hit. So yeah. It'd be really interesting to hear where you're at, how you've responded, and also kind of a view of going forward.
Yeah, sure. So we got a good thorough battering, basically. Our revenues dropped, be more specific, sorry. Our clean volumes dropped 80% in 10 days. So we went from doing just under 10,000 cleans a week to doing just under 2,000 cleans a week pretty quickly. And there is absolutely nothing really that can prepare you for that. Is easily the most extreme professional challenge I've faced, and I hope it remains so, because I'm not up for doing that too often. Now, I sometimes think that I was sort of lucky that 2008 hit pretty early in my career, and if you're going to get financially ruined, you want to do it when you don't have much to get ruined. And so I think, deep dark recessions are pretty good for your psyche long term, but best it happens early when you don't have anything to lose. And having seen 2008, and I was just moved over to the investor side of the table, and having seen a slow recovery, it was just obvious that you cut deep and aggressively immediately, and you don't hang around, and you don't die by 1,000 cuts, and you just go kind of head on. And I'm sure there was more that we could have done, because there always is, but I think we went pretty hard at it. So there was a sort of two-stage plan. One was to survive, and the other one was to sort of thrive. Now, bear in mind, those early couple of weeks, there was no visibility about where clean volumes might fall to, whether it was going to be zero, whether cleaning would be fully outright disallowed. So, we didn't know where the floor was. There was no coronavirus job retention scheme. There was no CBILS loan. We didn't know where we could cut costs to. So we went after everything simultaneously. So the first thing we tried to do was we tried to shore up revenue. So clean volumes ended up falling 80%. But we also raised prices, which I mentioned earlier, to take more margin per clean and pass through some of that to cleaners. And we also, sort of listening to what was happening, very quickly built the ability for customers to pay for cleans, even if they weren't happening, to support their cleaner, and made the quite difficult choice to continue to take our margin for those cleans. Have we made it absolute? Have we plastered it everywhere that, hey, we definitely take our margin? Are you sure, customer, you want to pay for this? No, we haven't, but we felt like we had to do it. Rather than allowing customers to cancel, we built a pause function so they didn't go away. We didn't need to reactivate them from scratch. So that's what we did on revenue. And then on the cost side, we just turned everything off. Now, we were lucky in that we were set up for growth. Our cost base is basically people and marketing. So marketing, we just turned down literally to zero in the space of a few days, and just said, that's going to hurt us long term, but we just got to do it right now. And on people, we reduced headcount, mostly part-time customer service people who we don't need. But we actually had a place-in plan for redundancies and reduced hours and reduced pay. And then the furlough scheme was announced, so we're using that instead. And then we went through every other cost, literally line by line, and said, we need to get rid of this. So we went to providers for our IT services, who we were paying 2-3 grand a month to. Not a big number in the scheme of things, but also quite a lot of money in the scheme of zero revenue, and said, hey, can we have this free? And quite a lot of them said yes, but we went down to the wire on that. So we pay £50 for our expense software. We got that to £25 for 4 months, like literally to every single line. We've cut cost out, and obviously our rent as well was another sort of one of the bigger ones. So step one was to survive, and then around that we also tried to extend cash. So we went back to our existing investors and said, hey, can we have some more money? Here's the position that we're in. We applied for the CBILS loan, we applied for R&D tax credits, we applied for grants, etc. So now we actually made a sort of healthy profit in April and significant extended cash runway. But fundamentally, we're still a business that's fifth the size that we were 2 months ago. So that's not okay, really. And not what I'm here for. And so the second part of the strategy was to kind of try to thrive. And one of the things that's most difficult for us to understand, and for everyone, to be clear, is obviously it will take some time for our market to recover, and it may recover to 100% of what it was before, or 80% or 120% of what it was before. I think broadly speaking, house cleaning is going to be about the same again. We already can tell that from customer behavior and so on. Like it's not gonna fall by half. It might be a bit smaller, a bit bigger, but it's going to be similar. But there's obviously clearly a boom coming in workplace cleaning. So we actually went into deep cleaning. We built a deep cleaning product, partly fulfilled by us, partly fulfilled by third parties, which is a kind of interesting experiment in itself. We landed some hospital cleaning contracts. We probably already decided they're not attractive because they're, a tenth of the margin per hour for quite a lot of effort, probably not worth our effort, but at the moment it occupies a dozen cleaners, so that's fine if they're earning good money. And office and workplace cleaning we think is attractive. So we're pedaling as hard as we can to build new business areas if our core market doesn't turn out to be as attractive it was before. And of course, the ideal is that our core market turns out to be as attractive it was before, plus a bit bigger, plus pent-up demand. So we actually get back to 120% in our core market, plus we build some other stuff, so we actually end up at 240% of wherever we were before. And then I suppose the two bits of caution that I would add are, I think there is a bit of a danger of being busy fools, trying to build things that don't need to be built. If hospital cleaning was attractive, why haven't we done it already? Well, yeah, fair point. It probably isn't attractive. We probably shouldn't be doing it. But you have to experiment to find out a bit. And then the other thing is to not accept, I sort of think about this quite a bit, but I probably worked harder than I ever have over the last, however long it's been, 6-8 weeks or so on. And I sometimes sort of feel like I'm, raging at sort of dying of the light or something. And it's not, in my mind, acceptable to come back slowly or to die by 1,000 cuts. My view on it is unless any single day I can prove that it's worth me spending my time on this business, whether it's small or large, I should either kill the business or kill my involvement in it. Like if I spend 5 years growing this business from 20% of normal to 25% of normal, it's wasting my time, it's wasting my team's time. And so the second part, rebuilding, will always feel less urgent than the bit where you're trying to escape the burning building. But I don't think that's the case. I think both parts are urgent.
Cool. Thank you, Avin. So really good food for thought there. We had a couple of questions come through. We've got one from Chris and one from Naomi. So I guess you can see the chat screen.
Yeah. Cleaners. Yeah, it's a really difficult question, this. I suppose, yes, we felt social responsibility. I mean, if we supported the cleaners financially, we just would have gone bust. So then we really wouldn't be able to support them financially at all. So there really isn't, we would have liked to, but we'd also like to give free money to people in sub-Saharan Africa, but that's what it would be. Yeah. And I think we need to be open and honest about that. So we would have liked to, but it's not realistic. I think we had 300 grand in the bank account at the start of this process. And cleaners used to earn around £1 million a month. So we could have probably provided them a week and then gone bust. So, it's a real challenge, that. Yeah. And obviously allowing cleaners to be paid for was a sort of important step in supporting cleaners, but it's not enough to make it obviously makes a positive difference to them, but it doesn't change the equation fundamentally. Yeah. For them. Their earnings have still dropped dramatically. I think that the 2 points where we had the decision over the other point here is it good for cleaners to be out? I mean, everyone is safer at home, fundamentally. At what point should somebody be out or not out? And the 2 points where we had a decision on should we shut down the business because it's better for everyone, especially cleaners, was the first when they announced the lockdown. It wasn't entirely clear to us whether we were allowed to trade, but it turned out we were allowed to trade, so we made the right decision there. And the other one was when they released self-employment support for cleaners. We thought for self-employed, including cleaners. And we thought if that's really attractive for cleaners, we should shut down and say, don't work. And it wasn't very attractive for them, so we didn't do that. But I think had there been really clear positive support for cleaners financially, at that point, we probably would have just said, let's just shut down and come back to this in a few weeks. On the mentors and accelerators and so on, I didn't do one of those, but then I'd spent 7 or 8 years in the sort of startup ecosystem. I think they've got a lot better, some of these accelerators and incubators. I'd recommend it if you're new to the startup scene, and if you're, if you've been CEO of 2 businesses before, you probably don't want to go to accelerator. If you've never done anything business related before, but you've got a burning idea, then you probably do want to go to an accelerator. So subject to the kind of experience you'd have, I think some of them are good. The big ones are Seed Camp, Techstars, Entrepreneur First, I think. But there's a long list of them online. It should be pretty obvious which ones the good ones are.
Cool. And I guess the third topic that would be really interested to hear from you, Avin. So you've obviously got a background in investing in businesses before you set up Housekeep, and I believe you still are an active investor in businesses. To what degree do you think COVID-19 has changed the landscape for businesses looking to get investment? And if it has changed the landscape, what do businesses need to be adapting to?
Yeah. I'll talk a little bit more generally about, I guess, what I think people look for, and then touch on COVID-19 specifically. So I think what an investor would be looking for are sort of 3 things. So the first is a team or maybe a person if it's early stage who can solve problems in the future. And so they're not backing really your sort of experience. That it's obvious that from whenever you gain investment, you've probably got another 1,000 challenges to solve in the future over the next few years. And really what an investor wants to know is, are you going to be able to solve those challenges, whether that's hiring or pricing or new market entry or being hit by a pandemic or wherever else it might be. And you can evidence that to people by showing them what problems you've already solved them and pleasantly surprising them about the problems you've solved. So one of the tricks I think works very well is showing people things that are a bit counterintuitive. So cleaning, everybody has an opinion because they think they understand it. And people would say things to me like, hey, why don't you hire hotel cleaners? Because they'll be really good. But I could say, yeah, thanks, John Smith, that's really interesting. But actually, hotel cleaners are not great at cleaning houses. And the reason for that is hotel cleaners don't do cleaning, they do wiping, because a hotel room has only ever been dirty for 1 night. So that glass shower screen just needs a wipe down. Whereas in a home, it might be 2 weeks, the lime scale's built up. So actually the process is different. And hotel cleaners are often not very good at that. But the ideal blend is someone who's done hotel and house cleaning. And it's like blindingly obvious, but it's not something you'd know unless you spend all of your time talking to cleaners, which is what I used to do. The second thing people look for are solid unit economics. Ideally right now, don't hang about saying we're going to make money selling footballs or blue widgets or cleans or whatever it is later. Show them that you can make money in the service or the product you sell right now, because that gives everybody assurance that the thing works. And I think the third thing people generally look for as investors is, tell me a believable story about how I can make 10 times my money because the market's big, or because you've got a vision on where this will go, or you've got traction, or whatever it might be. Now, in terms of COVID-19, I've sort of, I'm sort of just too busy to look at things myself at the moment. I'm not seeing much come across my plate, which implies to me that fundraising has slowed down because people think it's difficult. So I don't have a structured view of the post-COVID or during COVID landscape for investing. But I would imagine that what will happen is very similar to what happened in 2008, which is a flight to quality. So what we saw there was the very best deals, the ones that were still trading very well during 2008 and 9 and 10. Those deals were still getting done. And in fact, they were getting done at even higher prices, because from an investor perspective, you'd probably say, I'm willing to pay a bit more here and risk, and maybe I won't get a 5 times return, I'll get a 3 times return, but I'm banking on the top tier asset and team and product here. And what was happening was everything else, including the medium and average businesses that previously were getting funded, were no longer getting funded. And the reason was people just like, I'd rather park my money where it's safer, in effect. So what you found was some deals were getting done at really high, crazy prices with competitive processes, and everything else just wasn't getting done. And I'd imagine the same thing will happen or is happening here.
Okay, cool. Food for thought. So I've got a question which I just dropped in, which is, you know, from your investment career, what's the best investment you've made, and are there any that you've passed on that you now regret?
The obvious regret, I think, would be, and it was sort of us as a house rather than just me, but we passed on Just Eat in the early days. That was an obvious mistake in retrospect. And I think more generally, on reflection, thinking back to my investor days, when that was my sort of full-time job, I wish we'd been willing to pay up a bit more and win the auctions for the best deals. And we were always a little bit spendthrift. You know, we'd always try to get a decent valuation, get a little bit more for our money. But I think we'd be better off just paying up and getting the best teams and the best businesses. You know, we missed out on this sort of tremendous parking software business in the Nordics because somebody paid a bit more than us. And, you know, just had an outstanding team, outstanding technology, great market position. You know, we were sort of guaranteed to make money even at a higher price, and we were sort of nickeling and diming them a bit, to be honest. Best investment that I have made, just because it's sort of close to my heart. The first one that I did was a company called Picture Production Company, and they made film trailers. So, for example, the Bond trailer. And this business in 2007 was making 3 million EBITDA, and it sold for 40 million to a company called Lloyd's Development Capital. And they put a 20 million of debt in there. And in 2008, you might be aware that a recession happened. And their EBITDA went from 3 million to negative 1 million. And we bought this asset for £900,000. So we bought it for absolutely nothing. And it was my first deal. We were super hands-on, rebuilt the team, helped them move premises, helped them build an LA office, kind of really, you know, nuts and bolts kind of stuff. Lots of financial engineering and tinkering, lots of stuff on pricing. And even though in pound terms it wasn't the biggest return, in multiple terms it was very strong. We sold that for 17 million a few years later. And the reason that I think it was the best investment we made was I actually had something to do with it, whereas the rest of them, you're just backing great teams and just letting them get on with it, and you can't really take any of the credit. So I think in this one, at least we deserve some of the credit. So I'll pick that one.
Cool, thank you. So we've come to time. So on behalf of Birmingham Tech Week and everybody that's attended, Avin, thank you for giving your time and being so frank and open and honest with us. And I think there's some really great insights that you've shared. So I really appreciate that. And I'm sure everybody else does as well. So maybe we could show our appreciation with a thumbs up or a wave to Avin as we all go. So cheers. It was really good, Avin. And I think some great advice for everybody on the call.
Thanks, guys. Good luck with everything you're doing.